Let's say you had a stock that was just below 6,000 and then it jumps to more than 8,000 over 24 hours, not 6 months, just a day. Well, do you like that? That's Bitcoin doing it right now, surging by a couple of $1,000 in just over 24 hours after plunging Monday to less than 5,947,000 per Bitcoin. But look at it now, 8,031. Goldman Sachs says if you're buying, maybe you shouldn't. Goldman came out and is saying today that most cryptocurrencies will likely crash to zero eventually. Yet the bank was bullish on the underlying technology, which you may have heard this term, blockchain, saying it clearly has a role in many types of transactions. It's sort of a digital ledger that can follow and trace and make more transparent all kinds of financial moves. Cashing in on Bitcoin, that premise is exactly what Reality Shares Nasdaq Nexgen Economy ETF, an exchange-traded fund, does. It launched just last month under the ticker BLCN, some mouthy moniker for basically what it is, and it's a blockchain ETF. Right now, it's flat at $23.07. Joining us now in a Fox Business exclusive is the guy who runs it, Ervin. What did it start at?
$24, actually.
$24.
Yep.
So, in essence, it hasn't moved too much.
Yeah, we had a little bit of a nice run right off the bat of almost 25 plus, and then it's kind of backed off with this stock market correction.
Maybe a better way to show, I don't want to say froth, that has a negative connotation to it, but the excitement about it is that you opened with, what, $2.5 million in there, and now what does the ETF have? Yeah,
it's $102 million as of last night, and that, to put that into perspective, that's one of the fastest growing ETFs, since the launch of ETFs in general. It's very, very exciting.
Okay, the top of it is, this name is so mouthy, but that's for a reason. You're not even allowed to put the word blockchain in there?
There's so much confusion around what is blockchain versus what is cryptocurrencies that even the SEC didn't want that confusion to get into the hands of individual investors. So what we did was we just decided to change the name. It's the same strategy, but again, blockchain technology, meaningfully different, miles different than cryptocurrency. Blockchain technology is like, think of it like the internet. Email was the first killer app of the internet. Bitcoin was the first killer app of the blockchain. But the blockchain is so much bigger, and it'll pervade almost every different industry.
What surprises me, and you got to explain this to me, the names in here are old tech names: Intel, IBM, and then a few new ones put in there like Tencent and maybe Accenture. But why is that a blockchain? I know they're dipping into it, but can't I just buy a big tech ETF?
No, actually. So just like any new big innovative technology, it's going to just sweep the nation and sweep all these different sectors. So you need something that's a little bit more dynamic. There's actually about a third of the companies are in financials. Mm-hmm. A lot of the financials actually will be completely disintermediated if they don't get on board with this train. This is a 10-year-old technology. It's not like we just got here today. Intel has been working on this chip that could potentially increase their revenues by 20%.
Why this and not a Bitcoin ETF? And I know the SEC has been a flat-out no to even the Winklevoss brothers, who were here in this seat just a couple of weeks ago, saying that they had tried and that the SEC had shut them down on putting together a Bitcoin ETF.
Just like, I think the best way to think about it is Bitcoin or other cryptocurrencies or digital assets are commodities. So they're volatile, and they have a lot of volatility, and some of them, like Goldman Sachs said, won't even make it. They have no use in society. Many of them are scams and outright frauds. But the technology,
the underlying.
Yeah, that's the thing that we're investing in.
But Eric, and I really need to know, because as we look at these new technologies, what do you think happens? Because it was just day before yesterday that two ETFs, totally different business, volatility, the XIV, they collapsed because they didn't have enough to back up in assets what people wanted to pull back out. How confident are you that that won't happen to your blockchain ETF?
Meaningfully different. So what we invest in are stocks. We buy, and we don't use leverage. What those ETFs that had the problems were, they were investing in derivatives. And when you add derivatives into the equation with an ETF, not that there's guaranteed something wrong with that, it just adds an element to the equation. I think of shorting volatility like picking up pennies in front of a bulldozer, right? It's eventually going to blow up in your face, and you're going to get run over. And that's what that was. That yesterday was a perfect example of that.
Hey, you can go to gas stations and squish a penny without getting involved. You know, those little machines.
Exactly.
Good to see you, Eric.
Thank you.
We'll be
Yeah.
watching the development of your blockchain ETF.
Thank you very much.
Don't say blockchain, Liz. The SEC will get upset. Eric, Ervin, good to see you.